Welcome, folks, to our first event of the year. My name is Ziad Abdelnour. I'm President and CEO of Blackhawk Partners, and I'm founder and chairman of the Financial Policy Council. For the newcomers here, let me tell you a bit about the council. We've been in business since July 2010, so we're going into our 8th year. We have 22 sponsors, corporate sponsors, and the list is only growing. We have held around 42 events, and we have around 200,000 to 300,000 active followers on social media, and around 10,000 to 15,000 visitors a day. We're here trying to build a group of very well-educated people who understand the wealth creation process, and who, in due time, will all become millionaires and billionaires. We want to create an army of millionaires and billionaires. And to be able to do that, you have to be very well educated and differentiate the wheat from the chaff. We're looking to gather independent-minded people, very opinionated people, backed by real facts, and having them network together and make money. I like people who are very intense, who are very competitive, who want to make a difference, who want to kick ass. And that's what we're here for, to make an impact. Today, if you use the word capitalism, wealth creation, you're evil. There's nothing wrong in that. We have to get rid of this. There's nothing wrong in making money, because the only way you're going to employ people is by making money, by making a profit. If you're not making a profit, you cannot employ anyone. You cannot give to charity. You cannot do nothing. You can empower nobody. I'm not paranoid. I know what I'm talking about. I've been there. It's a club of wealth creators. It's a club that's going to empower a lot of people to become very wealthy, to bring about change, to make an impact. Make a damn impact.
This is Michael Mildenberger, and he's one of our panelists today. Michael, what are you doing here? What are you going to talk to us about?
We're talking about crowdfunding and ICOs. So we're talking about enabling private companies to raise money from private investors.
Why is this important?
Well, because a lot of private companies do not have a possibility to get access to capital anymore. So since the financial crisis, a lot of companies really struggle with capital. Also in the VC world, a lot of startup companies really struggle to get capital after an angel round. And so that's when crowdfunding and ICOs come into place, where companies now have a possibility to raise money directly from private investors rather than going to a bank or venture capitalists.
Hello, we're here at the Power Summit with Financial Policy Council. It's the first event of the year. We're talking about crowdfunding and ICOs. We have Caleb Huey here today, and he's going to tell us a little bit about the industry, where it's headed, and what's the best moves we could make. Okay. I'd like to start by asking you, where do you see the marketplace going? What are you most excited about?
The investor marketplace has a lot of opportunity for growth right now. Investors are very awake. They're paying attention. They're investing their money after holding back for many, many years.
So, first I want to thank the board members and the board of trustees who have sponsored those events and have been incredibly supportive throughout the last 7 years. Please stand up for big applause. I would like to thank CFMG, Finfora, FinTech Solutions, and Papaladin for sponsoring this great event. Thank you very much, Michael and Philip. So I'd like to have Michael Mildenberg, who also lives in Miami and is a friend of Alex, maybe say a couple of things for the award he's getting. Thank you.
Thanks very much, Sid. So my name is Michael Mildenberger, and I'm the CEO of Finfora, and I want to thank Ziad and the council of awarding Alex with this award. Thank you very much.
My pleasure. we had a third panelist here, Craig Huey, who's Caleb's father.
I'm excited about what we do. We get to make people's dreams come true by, today we're going to speak about how we raise capital for entrepreneurs and companies and expand people's businesses and dreams.
What is really crowdfunding and what's an ICO?
Well, crowdfunding is a broad term, and if you're familiar with Kickstarter, where I give you $100 and you give me a t-shirt with your company name on it, that would be one kind of crowdfunding. But it's also equity crowdfunding specifically, or debt crowdfunding, or ICOs, is asking the crowd for funds.
You want to add, Michael?
Yeah, I mean, I really liked your introduction with empowerment and wealth creation, and I think that's exactly what we're trying to do with the younger generation, actually. As the world changes right now, we enable through technology and following, under compliance, and enabling companies really to get access to capital which they would have never gotten before. So and really crowdfunding and ICOs empowers these companies now and brings them together and connects them directly together with private investors. And it also actually empowers now investors. So I really like that picture of empowerment and wealth, because that's really what we're talking about.
Perfect. Thank you, Michael. What kind of companies should consider or watch out when raising money through crowdfunding or ICOs?
Well, we've advertised offerings in debt and equity, and now we're moving into a lot of ICOs because of the marketplace. So the first deals that we were able to advertise to investors for my firm were debt deals. And we were able to raise $10 million for the first client that we had under Regulation D 506C. We sent out direct mail pieces, and we advertised digitally to accredited investors and got them excited and interested. This is right after the financial collapse, so the real estate market had tanked. They put together this real estate fund to buy up a lot of assets. They were able to easily then generate $10 million into this fund through this advertising offer that showed a great potential return for the investors. It got them excited.
Yeah, and I mean, there's if you look at, the field of, 99% of all the companies in the United States are, small and medium-sized businesses, including the startups, obviously. And that's the backbone of the economy at the end of the day. It's not your HP and IBMs in this world. It's, these 99% of the businesses, they supply over 50% of the workforce in the United States. And they get ignored a lot of times. And that starts with, like a brick and mortar company, which he goes to work every single day, and he has an air conditioning business, and now he can't buy another, the truck for his business, right? Because the bank says it doesn't give him money anymore.
So what does Finfora do exactly?
So we provide the technology and all the compliance which is necessary in order to do fundraising either through debt or equity or an ICO. So we have a product or a solution which is called Series 1. So literally you can come log onto the platform as an investor, and 10 minutes later you're a shareholder of that company. And then we work together. So there's three real pieces here. So you have technology, you have compliance, and you need marketing. And we don't market the deal actually. So we work together with Caleb and his organization to actually where he takes that deal and he actually has all the tools in order to market it to accredited or non-accredited investors.
Yeah.
Okay, so what makes you different than other ad agencies? Why are you specializing in Jobs Act, equity crowdfunding?
Well, other ad agencies, if you think of a branding agency, they might put a billboard up with somebody smiling holding a Coca-Cola. If you're at the supermarket, you might look at Coca-Cola and for some reason feel good about the brand. That's not what we do. So I put together, in the crowdfunding sense, I'll put together an integrated advertising campaign where I'll send out 100,000 pieces of direct mail.
100,000 pieces of direct mail?
Yeah,
Wow.
to 100,000 investors, potential investors. I'll follow up to the same audience of 100,000 people with Facebook ads, banner ads, emails. a pre-rolled TV commercial online. So if they're online browsing and they click for a market update by Jim Cramer, before they can see that, they have to sit through a presentation on one of the companies I'm advertising and their investment offer. If I get about a 1% response rate, then the company now has 1,000 new shareholders.
It's substantial.
And if they're putting in $1,000 to $4,000 each, then that's, what, $10 to $40 million.
You have won 84 awards. How the hell did you do this? What for? I mean, this is very impressive.
I've won probably a dozen awards. The rest are my father's.
Yeah, I mean, the group, your family.
My company has won 84 awards, and we've done that. My father got his start advertising investment newsletters. If anybody's familiar with Howard Ruff and the Ruff Times, he launched that publication. We did 60 million pieces of direct mail over the tenure of that client. That was probably over 2 decades.
Jay Sulzberger, I do a little bit of mathematics. Do you still recommend that people read how to write advertising copy that sells?
I would, yes. That's a great question. I love a lot of the classic books in direct response advertising because the principles don't change as the media does. So we apply direct response advertising copy principles to Facebook ads, and they work better when we do that versus general editorial copy. So yes.
Hi, my name is Barry Monet. A lot of good stuff, and I'm involved in a project right now with a partner here who are entering the space. And I have 2 questions for you. Number one, obviously you fill the important roles of marketing as well as the broker-dealer and the platform. What about compliance? What are you doing on that aspect? Do you partner with a law firm, or do you have somebody specific, or are you actually doing that?
Yeah, no, in our case, we're actually doing it, yeah.
Really?
So, yeah. So we doing the compliance in-house. We have a broker-dealer license. We communicate with FINRA all the time. So when a deal comes in, we are actually the ones which register them under certain exemption, depending on what investors they want to solicit, actually, right? Non-accredited investors versus accredited and so on.
How do you onboard a client onto a platform, and how long it takes to really see the money raising? And what's the cost associated with raising the money with your platform?
It's $1 million for every deal. No, just kidding. No, so when we onboard the client, I mean, you need to make sure that you get all the information from the client. So on the onboarding process, it takes a little while in terms of getting all the information from the company. That's actually the hardest part, that you can get all the info from the company. So it can be done in 24 hours.
Who makes the call for the differentiation between either debt, equity, or a T-shirt when you're talking about a crowdfunding endeavor? And then what products qualify the most for it, what qualify the least, and how do you then sort that all out with regard to debt, equity, or T-shirt?
Yeah, I mean, we have internally a team which takes a look at these deals. So we come out from the broker-dealer world, and so we go in there and we look at the basic criteria, management team, possibility, do they have a viable product or not, these type of things, and then we make a decision, and then we look and give a recommendation of, hey, you should maybe organize your raise as a loan versus an equity, or try an ICO. So that's the internal team makes that decision. So we're consulting the client on that and give him some suggestions. And it's not like some clients we're not taking on. I mean, it's not like everybody comes to the platform automatically gets listed.
My name's Alan Blair. I'd like to Ziad's question to Caleb with regard to what percentage of clients that you take on that fail.
Sure.
And also, would you discuss your pricing structure?
Yeah, absolutely. So we have.
And if they do fail, why do you think they would?
Yeah. I always tell people that we are not magicians and that the marketplace is always right. So if the marketplace has a demand for something, I can tell that story, and if they want it, they will invest in it. So I can present the story in a very appealing way. and I can write all of the best direct response copy and I can win an award for it. But if the marketplace doesn't like it, they're not going to buy it.
I highly respect your opinion, but I very much disagree. I'll tell you why.
Okay.
In my experience, I'm not the messenger here trying to tell the client, you know, Mr. Client, you take it, we understand what the market is, etc. No. The best salesman in the world, and I worked for one of them, called Michael Milken, when he commercialized junk bonds, there was no investor in the world who was buying junk bonds. Nobody. He educated them as to the value of a junk bond and sold it aggressively to them and made a lot of money because nobody was able to sell these securities. So the spread is very high because it's very difficult to sell. You're running a monopoly on that. You make huge spread. I don't agree that the market is very uneducated. So all what you need to do is to follow, this is my opinion. I understand you think, Caleb, but you really have to really know your stuff very well. So that at the end of the day, no matter what the rebuttal is, your arguments are stronger. And this is the art of a guy like Milken, because he knew the market, he knew exactly what to say to people. Like at the end of the day, like what people say, you have to know one thing very, very well, better than anyone out there, and to be able to sell it to them. So it's really the strength, the persuasion that you have, not the market.
Hi, my name is Jeff Bardo, Spiritas Capital Partners. We work with a lot of small and medium-sized businesses, and I'm trying to figure out where crowdfunding and even ICOs might fit into what I do. You mentioned an air conditioning company that might look to borrow $100,000, but this doesn't really feel like it fits that scenario. So what's the sweet spot, given transaction costs and the investor base, for a loan? What's the sweet spot for range, pricing? That's my question.
Well, I mean, the air conditioning base was just an example of that there is all these companies are very different in nature. And so, and on the other side, you have a very different audience of investors as well too. So you have investors which are, more risk averse, and they would rather say, hey, I get 10% a year, that's great. Versus other investors say, I know I can lose all my pants, but maybe that's the next Google, right? Yeah. So it really depends who you're dealing with, and it's not for us to judge on a platform that one is better than the other, but you have to kind of like fit them into certain categories.
All right, thank you very much, guys. Our next event is April 5, mark your calendar. We're going to talk about family offices, how they invest their money. This is no class right now of investors, other than VCs, private equity groups, etc., family offices. So we're going to put together a stellar group of experts and panelists, April 5, mark your calendar, and have a great evening. Thank you for coming. Come on, where's the computer? I'm sorry. Man.
Everybody can have a hand. Yes. Very good. All right, thank you.
Awesome.